Good morning, Sebring. Hey, how's everybody going today? Looking forward to our conversation with Dave this morning. I hope you're doing well as we hit hump day today, Wednesday, November 6th. I hope your day is going well and your week is off to a great start. As we continue to look at what the markets are doing, what earnings are doing, a little bit of economic news, not a whole lot, but hey, hang with us. Dave will be with us in just a moment.
There. Speaking of feeling romantic, we all love money to one extent or another, so let's do the romance report. How's the finances doing up on Wall Street? Time to find out this morning. Downtown Sebring we go to the offices of Statler Financial Services. Phillip Statler's there. Phillip, good morning.
Hey, good morning, Dave. Hope you're doing well today, halfway through the week. Yesterday, a little kind of I don't know, it was really a flat day for all intensive purposes, and today's looking kind of flat too.
Yeah, well, we've had kind of a skyrocket for a little while. Taking a little pause is probably healthy. Yeah, it was mixed yesterday. The Dow and the NASDAQ both marginally up, but enough to set new closing records. Standard & Poor's just decided not to participate yesterday. It was down by a little over 3.5, which pretty much nets down to a flat day. You're absolutely right. And we start the morning out with some macro news. The government put out worker productivity numbers, and how much work we're getting per employee fell last month, and we weren't expecting that, were we?
No, we really weren't. It fell by 0.3%. Doesn't sound like a lot, but that's really the first decline we've seen in a while. And it was actually expected to increase by 0.9%. So you're looking at a 1.2% spread there in what was expected versus what actually happened.
Yeah, that was the first absolute decline in productivity of the American worker in like 4 years. So, okay, fine. 1 month data point, you look at it, you put it in your back pocket and wait to see whether you got a trend, but it's certainly not good news.
No, it's not. And let me just add this to, we didn't talk about this beforehand, but I was reading a report by the IMF, the International Monetary Fund, and a study they've done has really linked that the auto industry from a global standpoint is in a recession, and that the auto industry accounted for 25% of the decline in growth or lack of growth between 2017 and 2018. I thought that was kind of interesting.
Yeah, that really is an interesting number. It's not a shock that one industry could affect the entire economic outlook. The auto industry has a domino effect across 100 other industries as well with all the stuff they buy. But it's kind of interesting having it drilled down to isolate the problem in one industry, isn't it?
Yeah, it really was. And so that just kind of caught my eye this morning as I was kind of going through the news articles.
Absolutely. Tidbits from the government data dump that we'll just pass on for the sake of interesting information. Third quarter labor costs in this country up 3.6%. Third quarter hours worked up 2.4%. So we're getting more work. And U.S. labor output was up 2.1% in the third quarter as well. All of that sounds relatively healthy because one of the complaints that we've had has been the fact that our wages have not really been growing at the rate you would expect a boom economy to support them. The only real fly in that ointment is the productivity figure, I'd gather.
Yeah, I think so. I mean, productivity definitely was a kind of a surprise, not a good surprise either. But I think the other numbers are definitely more positive. That's for sure.
Absolutely. The big number that's going on around Wall Street right now isn't even a number. It's just the twittering that happens when you get a little bit of merger and acquisition action. A member of the Dow Jones 30 is actually in play. Walgreens, same people that engineered the Nabisco buyout many years ago, Kohlberg, Kravitz, and Roberts. They're actually involved in a possible takeover of Walgreens and bringing it private. Wow.
Yeah, that's what the article says. It's if that happens, it would be the largest leveraged buyout in history. Leveraged buyout means they got to go borrow the money to make it happen. So we'll have to see how that plays out and what happens. I haven't seen what Walgreens stock's doing today, but I got to think it's probably pushing it up some. And that's kind of you look at that and you got CVS coming out and reporting. We'll talk about that in a minute, but they're closing 22 drugstores. That's not a lot next year, but still they're closing some stores.
I wonder if they're all across the street from a Walgreens.
Yeah, really. It's typically the way it is, right?
They always seem to be one way or the other. Another tidbit came out of one of the news tickers. Evidently, somebody's tried to start a bidding war. They're suggesting that with all the cash money that Warren Buffett's got in the Berkshire Hathaway treasury, he ought to go and buy Walgreens as well. One way or the other, you generally don't hear a member of the Dow 30 end up getting in play as a takeover target, do you?
No, you usually don't. But again, it like I said, historically, it would be the largest leveraged buyout in history. And granted, that would be the reason because they're one of the top 30 companies.
Understood. Looking at reports that have come out for the morning as we're really into the absolute meat and potatoes part of earnings season, there's a running ton of them. One of the stocks I noticed I had to make mention of is because we've been having some fun with them in recent years. Papa John's, they threw their chair out over a year ago. Looks to me like they're finally recovering and selling some pizza, I gather.
Yeah, they are. They had a decent quarter. They were up better than expected. And so their stock's trading up. Same store sales did a little bit better too than what they expected. And so they're trading up. The article I have right here is up about 0.1%, or I'm sorry, down about a 0.12%. So I'm not sure exactly what's got them going negative right now, but because the shares initially jumped on the news, and so they've kind of made a flip-flop there.
It's interesting to see them beat the street regardless of which direction their stock is going. Must have been a guidance element or something in the report. I know we've got a running ton of them, so I'm going to shut up and let you drive the truck as far as what you see as being notable out of all the reports today.
All right, so let's start out with retail. Capri Holdings, which doesn't make sense to a lot of people, but it's the Michael Kors parent company. They missed by 8 cents a share. Revenue was in line with expectations. The company kind of pointed to higher expenses, and the protest in Hong Kong was affecting them to a certain degree. And so
I imagine a lot of shipping goes through Hong Kong for them, doesn't it?
Yeah, I think so. And so they're down about 0.8% this morning. Then, like I said earlier, we got CVS reporting today. They beat by 8 cents a share, and revenue came in above estimates. Their pharmacy benefit management unit did well, and it's it bought out Aetna Health, and that was a big contributing factor too. And so they're up about a little over 2.5% this morning.
Intriguing.
Now,
that's going to be an interesting war between CVS and Walgreens to watch over the next couple of years, with CVS just saying, oh, to heck with it, and buying an insurance company.
Yeah, that was kind of a bold move there. But let's talk about health insurance companies. Humana reported also. They beat by almost 50 cents a share. Revenue was ahead of forecast also. They had stronger results than expected in their Medicare Advantage business, and they raised their full year guidance. So they're trading up this morning about 3%. Yeah. Another one on retail side kind of is Coty, the cosmetic maker. They beat by a penny a share. Revenue, though, was below what the Wall Street had forecasted, slowing sales in the consumer business. But there must be more to it than what I'm seeing, because they're actually trading up this morning 4.25%.
Actually, when I think about it, making more money out of less sales seems to be the trend of this thing. And they're rewarding people that are doing that this quarter, which is kind of a reverse from prior quarters.
Yeah, it really is. Now, I know probably your favorite restaurant out there, Dave, Wendys reported. Yeah, so they beat by 4 cents a share. Revenue came in above what was expected, and they raised their full year guidance. So all good things happening at Wendys. They're up 4.5% this morning.
That's a lot of Frosties.
Yeah, it really is. So another one I want to talk about is Weight Watchers.
Oh, yeah.
So Weight Watchers beat by 2 cents a share. They saw revenue, though, fall short of what was expected. And then the current quarter forecast fell way below what was expected. And so they're trading down. If you got them, they should be on your big losers list. They're down 15.5% this morning.
Wowzers. They didn't make my big loser list for one reason or another, but I've never figured out the pattern where my list comes from. Evidently, that's becoming a really, really competitive business, isn't it?
Yeah, I think it really is. The other one I want to mention, this one we talked about it yesterday on the earnings side is Uber.
Oh
Now,
yeah.
Uber's came out, they reported their earnings and stuff yesterday. However, today is the end of their lockup period from their IPO. And so that means insiders can start to sell their shares today for the first time. And so they're under some pressure this morning, down 5% before the market gets open.
I kind of assumed that generally involves in at least a 1 or 2 day sellout when that lockout period ends, right?
Exactly. You know, people want to take advantage of being able to finally sell their stock. And let's face it, their basis, what they paid for that stock is probably next to nothing. And so they finally get to get some cash for that. The last one I want to mention today is Match.com. You
Mm-hmm.
know, they're the parent company of Tinder and a lot of those other dating services. Don't have the exact number, but they reported better than expected profits and revenue. But the dating services stocks really under pressure this morning because of lower than expected current quarter guidance. And so they're having some issues there. They're down 12% this morning before the market gets cranking.
How, how do you do guiding on a dating service?
Yeah, I don't know, man.
Everybody got married. We're going to heck in a handbasket. The only other thing that I saw out of the bunch, and this was top lines also only, I understood that Office Depot beat the street, talking about stores we've got here in this town as well. So rolling it all together in a big ball, how are we doing 45 minutes before the market opens, Phillip?
You know, we haven't moved a whole lot since I started watching this morning. It's relatively flat. Everything is up right now, 0.13%. And for the Dow, that means $35. For the S&P 500, it means almost $4. For the NASDAQ, it means a little over $10. So not a whole lot of movement there, Dave. But let's look at the commodity side. Gold and silver are both up right now. And for gold, that's a switch because when I first started looking, they were actually down. They're up about 0.5% this morning. Silver's up about 0.2. We've got crude oil, though, up from where we saw it yesterday, but down from the close. It's at $57.09 a barrel, down 0.25% right now.
I got to get some below 57 would be much nicer, wouldn't it?
Yeah, it would. Actually, below 56 would be kind of where I'd like to see it.
Yeah, but we can always hope for at least incremental progress. World markets, Asian Rim and Europe, all showing green ink this morning. Asia at the close, everything pretty well green, and Europe is trading up, in some cases, substantially midway through their day. Phillip, somebody needs some advice how to be able to ensure that this boom turns into something that you can count on for your retirement. That takes neutral advice from an unbiased advisor. How do I find you to get that advice?
You know, Dave, what it really takes is a retirement coach, somebody that can help coach you into and through retirement. And that's what we do here at Statler Financial. Give us a call at 382-0037 to schedule your financial x-ray review. And then join us every weekend where we help coach you into and through retirement through that program. 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings on your sister station, News Talk 730 a.m.
And streaming at newstalk730am.com. And yes, apps available as well on the phones. Phillip, thank you so very much. We'll catch you tomorrow, and let's see if we can keep it green all day today. Fair enough?
Fair enough, buddy. Take care. I'll talk to you tomorrow.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Have you done your...
Hey, folks, again, I want to thank you for joining us. Remember, I'm here to help coach you into and through retirement. All you have to do is pick up the phone and give us a call at 382-0037 and set up your coaching session where we'll detail out where you stand right now and where you need to go to get to where you want to be. Have a great day. I look forward to speaking to you again tomorrow.